So we have to start building infrastructure for our model now. Building infrastructure means you have to create, first you have to create a layout, then you have to get the data from annual reports to Excel, then rearrange the old data in such a way that it becomes easy to model, and then start the forecasting process. Okay, so create a new Excel file in your folder, and I have named it as financial model of TVS Motors. Files in our Excel file, but let's keep the first tab or first sheet as income statement. The second one, of course, is your balance sheet, and the third one is cash flow statement. Now see, there are two ways in which you can deal with Excel. Am I audible back there? Is it audible? These are called grid lines in Excel. Okay, so I personally prefer not to have these grid lines while doing calculations. So you can simply get rid of them by saying Alt W V G. Alt W V G. So you get complete rid of those grid lines, and you have a plain. You still have the sales page. They are just not visible. And if you want them back, you can simply have Alt W V G again, and you'll have those grid lines back. Okay, so whichever way you like, you can arrange it in that fashion. Now come on to the income statement. And this is where we will have particulars. So particulars is your column A. I'm increasing the width of this. Column B is to be kept blank, so we don't do anything in column B. That would be used for some other purpose later on. Column C, this is our first year. We are starting with 09 10 A. 09 10 A. A would be actual. Okay, so again 10 11 A, you can also call them as FY. Financial year 10 11 A. Financial year 11 12 A. Financial year 12 13 A. Financial year 13 to 14 A. See, now what is the trick here? We would be having income statement, balance sheet, cash flow statement, a revenue model, cost model, working capital schedule, debt schedule, asset schedule. All these schedules will have years. So what uniformity we are going to keep, that 09 010 data has to be in column C in all the tabs. Okay, so going forward, if I want to link some data, I have to ensure that when I'm doing some calculations, then I'm using column C of one particular Excel sheet and column C of other sheet. So we are going to consistently use the same column coding here. So try to keep it similar to me. 9 10 10 11 11 12 12 13 and 13 14. Okay, let's pick up the annual report of TVS Motors, and let us start with 13 14. These are the consolidated. Earlier ones were standalone. Okay, so we'll have to replace a few numbers quickly. Shouldn't be a lot of time. Yes. Any questions? Going further. Profit before exceptional and extraordinary items and tax is equal to 8405 minus 8121, 284.56. Exceptional items profit before extraordinary items and tax $266 302.51. Extraordinary items income profit before tax tax expense. We don't need the bifurcation, so I'm simply going to take a total of these numbers. Profit or loss for the period. Share of profit of associates. Minority interest. So I'm renaming this number as profit and loss before minority interest. Numbers are tallying. Please ask anything that's not clear. What I'm also going to do is I'm going to insert a freeze pane here which is Alt W F F. So going forward, if I go downwards or if I go this side, I'll still be able to see the headings. Clear? The point where you should generally insert this is right below the first year. So Alt WFF to remove it, Alt WFF to insert it again. And then when you go downwards, you still see the headings. Tax expense, I took all the numbers separately and I added them up. Then integrated a formula. That's a hard-coded number. Hard-coded number. They've given two profits here. Profit and loss for the period they've given twice. The one which was above minority interest, I've just renamed it. Profit before minority interest. Whatever we are doing as of now, very soon we are going to discard it all. Because we'll have to rearrange all the data and make it easier for us to analyze. Is it done? May I assume it's done? If you lose one step and you lose everything thereafter. So that's why I'm waiting for you. next. Just to expedite the process. To expedite the process, we are going to prepare an analyst-friendly format parallelly. So this is a reporting format. This is how company has decided to report it. But for us, when we want to forecast some data, we would want it to be in a slightly different format so that our life is easier while forecasting it. So इसको थोड़ा हम लोग नीचे push करते हैं. Alt HIR to insert a row. Alt HIR and then just keep on pushing it downwards because we are going to make our own format now. Okay, so what will we have in our format? These numbers would be same. The first 3 lines, they would be same. So I'm taking them and copy pasting as it is. However, we do not want other income here. Okay, so let's go and read what other income really is. So there should be a notes to account. Other income notes to account is this note 18th. Okay, let's go to note 18th and find out what that is. This was your 17th. Revenue from sale of products, sale of raw materials, sale of services, other operating revenues, and excise duty. In this, you have other income, which is some part of that other income is interest, some of it is dividend, gain on sale of investment, profit on sale of fixed assets, and other stuff. So this should typically be not a part of your operating profit. Are you following this? This is a non-operating income. So therefore, this part we are going to push downwards. So what will we have here? Once you have net revenue, then we will have cost of goods sold. The entire manufacturing cost. Okay, and how do you get cost of goods sold? By taking all the direct manufacturing expenses. What we are going to do here is, do you see these 3 items? Cost of material, purchases of stock in trade, changes of inventory. These are all your raw material cost. So we are going to take an addition of these numbers, 5903, and this number we would put into your COGS. So we have cost of goods sold 5903 now. You add labor and overheads, direct overheads, but the company would not give you how much is the direct expense, how much is indirect. A company would have only an employee benefit cost on the annual report, which will have all salaries as well as labor charges. So you can never guess how much of that was labor, how much of that was salary. So what we typically do is either make an approximation or assume that a certain company which is not very labor intensive, simply assume that entire labor cost is put into non-manufacturing element. Yes, have you got cost of goods sold? What we get after this is gross profit. And of course, gross profit is simply net revenue minus cost of goods sold. To get that simple borderline, Alt HBP. This is where we will start having a list of other expenses. So we'll give it a heading. Heading would be selling, general and administrative expenses. which we would call as SGA, Selling General and Administrative Expenses. And slowly we will start putting those expenses there. So first one is employee benefit expenses, which would come as it is. Then we have finance cost, which we are not going to put as of now. Depreciation, which we are not going to put as of now. And other expenses, which is 1447. This is a big number and we cannot let it remain as other expense, because with other expense you do not know how to model it. So what we do with other expense now, we'll go to that schedule. So let's search the schedule for other expenses. This is a schedule, page number 83. Look at the numbers carefully. Total is 1500. We have to find out which one is important. Okay, so what I'm doing is, for the sake of convenience, I'm going to copy paste this entire region now and put that in some corner of this file. No, not working well. Control copy. So I prepared that other expenses schedule here in the corner. We need not do that for every year, just for understanding purpose. We want to see that which one of these expenses are important ones, either from a legal point of view, or from a modeling point of view. So I'm building a percentage schedule just to analyze this. The total here is 1447. So how much percentage is each of the expense? So 48 divided by 1447. I'm freezing it so that formula can be copy pasted easily. Formatting the number and then simply expand. So we have a total of 100% here. And the moment you do this, then you know that which numbers are important ones to look at. Okay, so let me just adjust the size to make it clearly visible. This is my other expenses. This number clearly seems important. Packing and freight charges. Advertisement seems to be an important number. About 300 crores there. Other marketing expenses is important. Power and fuel maybe about 6%, but not very significant. So now what we will do is, we will break down that other expense section into smaller parts. Okay, how will we do that? Packing and freight charges, I'm writing separately here. Advertisement and publicity separately. Other marketing expenses separately. And then one blanket other expenses, which will include everything else, okay, which would be equal to 1447 minus sum of these three numbers, 553, Alt ESV other expense. Total of these numbers 1988. Selling, general and administrative expenses. Therefore what you'd get now is called earning before interest, taxes, amortization, depreciation and amortization, EBITDA. And EBITDA number of course is gross profit minus the SGA value. This is where you will get depreciation and amortization. Depreciation and amortization we can pick up from the earlier income statement. 148.96. What you'd get here now earning before interest and taxes. Which is called EBIT. Also the operating profit of a firm, which is EBITDA minus the depreciation. This is where we will add other income. So the other income that we had removed originally, that needs to be added back here, which was 26.66. So what you would get here is profit before tax and extraordinary items. Profit before tax and extraordinary items. Adding up these two values, 364.65. Hold on, these two things have gone wrong. We need to take care of one more thing before that. We will have finance cost here. Finance cost 80.09. Then profit before tax, extraordinary items and other income. Then other income and addition of these two items. Next, exceptional and extraordinary items combined, since smaller numbers not very significant. Exceptional and extraordinary items. So I'm going to take numbers, addition of both the numbers. Exceptional 17.95, extraordinary 4.58, just adding them up, 22.53. We'll discuss it. We'll discuss. Then what you have here is profit before tax and minority interest. $307.09. Now taking the tax amount, tax expense, profit after taxes, profit after tax but before minority interest, $186.30. The number is matching. Yes, please ask questions. Yes, anything that you want to ask. I'm sure we are not together. So please ask. Wherever you're stuck, you're doing this for the first time, so it's okay to ask. The more questions you ask, the more help you're offering to others. Uh-huh. Cost of goods sold is total of these three items. This, and this. So take a total and do a pay special. Huh? Yes, yes, yes. Absolutely. Yeah, they typically will mix salary and wages together. So you cannot find out how much is wage and how much is salary. Everything, yes. Everything. Absolutely. The entire एम्प्लॉय वेलफेयर. अच्छा. Yes, Rahul. See, if you get stuck at the first one, then you're stuck for next 3 months. Okay, because everything is based on what we do as of now. So you have to get this right. Please ask questions wherever you're stuck. SGA is the heading. Which one? 13. Sorry? No, check if your numbers are same. Your numbers are same. Excel can't make a error. The numbers would be different. The total of these numbers have to be 1988. Yes. In fact, this question was raised last time also. There are like technical definitions in US GAAP. Similar in this area. Any item which is unusual and infrequent both is extraordinary. Earthquake, unusual and infrequent. And any item which is not fitting into extraordinary but not in the regular nature of the business is exceptional, which means earthquake in Japan, which is not unusual, but so it would not be extraordinary, it would be exceptional. It's all in accounting standard 4, 5. Technically, anything which is non-recurring comes into exceptional. Anything you're stuck at, please ask. Yes, I consolidated and put them into one. Summary 88 is right. Other expenses. Everything else apart from that is other expenses. There is a schedule of everything. Did you get a schedule?